Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at ICE GASOIL futures. I'm thankful for two things here. Firstly, that I did not do any analysis here the last 2 years. This is because looking superficially at this month's chart, I would have had to write and then read as long a commentary here as I have made this time on ICE Brent crude oil futures. Secondly, I'm thankful that this monthly chart seems to be a little clearer than the ICE Brent crude oil futures chart. So, much like ICE Brent crude oil futures, we have the structures in place for both an imperfect descending scallop pattern as well as a descending wedge pattern. Let's deal with the imperfect descending scallop pattern first. The action from 2014 until the start of 2020 looks very much like a descending scallop pattern. This will give a preliminary point X in the 11.15.5 area. This is not a target because, much like Brent, the subsequent action has affected this pattern. Now, I will deal with the actions generated from 2020 shortly. The next big pattern, and a more secure looking one as well, is the action from 2008 to date as a descending wedge pattern. However, an even better looking version is to look at the action from 2014 to date as a smaller but perhaps more powerful descending wedge pattern. The second has the required number of 5 touches on both sides, whilst the former has to be seen with some rose-coloured spectacles as the action from late 2020 to early 2021 has to be optimized, and quite a bit as well. I will thus give 2 points topside for this pattern, though I am inclined to view the one for the 2014 to date action as being more of a target rather than a point. Anyway, point X1 for the imperfect 2008 to date action is in the 1207 area. Meanwhile, point X2 for the better looking, if smaller, descending wedge patterns in the 1070 3/4 area. And the lowest, and thus the most easily attainable of all the points mentioned. Now, let's look at what 2020 gave us. The first few months saw an extension of the dip, normally seen in the construction of descending scallop patterns. You will note that I have not retired it as a pattern, and the reason why is because the market halted dead on the lower trend line, currently 153 3/4, of the 2009 to date move. This is part of the construction of the falling wedge pattern, but I've left it on still there as I see it as an extraordinary extension of the dip rather than a fresh construction. Nevertheless, this lower trend line is a solid looking support and managed to halt the market. However, it did not cause the market to turn back up. You see, you can view the pull back up to the 400 level as a reaction to the hard and fast fall. It is not until the combined monthly key reversal up and bullish engulfing pattern seen in November 2020 that we saw the start of the move back up. This is easily seen as this is the second point on the 2020 based uptrend, currently at 490 3/4. The following month, December 2020, saw a full move up over the 400 level, and we have moved up ever since until October 2021, when prices ran into the resistance originating from October 2018 in the 750 to 755 area. During this move up, prices had pushed up over all the moving averages, as well as the downtrends from 2008, which is currently at 438.5, and 2013, currently at 593 1/4. Perhaps the most significant of all, apart from the halt in the 750 to 755 area, have been the closes over the 2013 to date downtrend. and the long moving average, currently at 658 3/4. This last moving average has been a little fraught, as despite 2 consecutive monthly closes over it in September and October last year, November saw a large bearish engulfing pattern that seemed to counter the 2 prior months. However, the close for November was right on the 2013 to date downtrend, and December staged a reactionary move back up with an immediate countering bullish piercing line pattern, closing back over the long moving average. So far this year, prices seem to be building upon that action, and perhaps looking once again at the 750 to 755 area. There has been a lot going on here, and despite my efforts to condense the commentary for GASOIL, I'm afraid it is getting close to the length of Brent Crude's commentary. But I'd rather tell the truth than just keep it short.